What is going to happen to 2023 real estate market, especially the housing price in Silicon Valley? Before I go over the forecast for 2023, let's first take a look at what happened in 2022. To describe 2022 real estate market, especially here in Silicon Valley, there's one word, which is roller coaster. We had a crazy up and downs in 2022 compared with other years. First, the housing price for 2022 single family house. The peak is in 2022 April. At that time, the median price for single family house in Santa Clara County is 1.95 million. And that number goes down all the way to be 1.465 million in December, which is the lowest in the whole year. That is about 25% reduction in pricing. Let's look at a condo and a townhouse. Condo and a townhouse, the median price hit the highest point in May 2022, which is 1.06 million. That number went down to 875,000 at the end of year in December. So that is about 18% reduction in median sale price for condo and townhouse. So in addition to the big drop in sale price, there also a big drop in total transaction volume. For both condo and a single family house, the total transaction volume dropped by about 30% in 2022 compared with a year ago. On top of that, we also see a big increase of expired listings. Expired listings are the listings that were put on market for sale, but for some reason it doesn't get sold, so it expired. That number increased a lot. For single family house, the expired listing is only at 13 in April, and it went up all the way to 118 at the end of the year. It's slightly better for condo and a townhouse, but the trend is not different. For condo and a townhouse, the expired listing was only about 5 in February, and that reached all the way to about 68 in December. The number one contribution to the major change of sale price is the quick increase of mortgage rate. The mortgage rate was about 3% around a year ago. It went all the way to over 6.5% for 30-year fixed rate. Now, how this translated to the monthly payment? For 900,000 sale price, assuming 20% down payment, for rate around 3%, the monthly payment is about $4,000. This number will become $5,300, an increase of $1,300 per month if the rate increased to 6%. At interest rate of 6%, for monthly payment change about $1,300, that is equivalent to the change of sale price by about $220,000. So that pretty much explains majority of the price change that happened over the past 1 year. 2023, where we are going to go for real estate market. The California Realtor Association recently issued a few interesting data I want to share with you. First, the mortgage rate is likely to go higher in 2023. The best case scenario, it's likely to be around 6.7% for 30-year fixed, and worst case scenario, the number is likely to go over 8.5%. That is quite a lot impact for housing monthly payment again if we really reached over 8%. The second thing to look at is the CPI index. CPI index is the major indicator for the inflation. It gets better after all these interest rate hike. However, it hasn't reached the target yet. Fed target is about 2%. We are not likely to get there until end of the year 2023. So more interest rate hike is on the way. A few other things to look at. First is the yield curve. Now, 2-year and 10-year yield curve, if they are inverted, it's not a good sign. It's usually point towards the recession. Another indicator is the personal real wealth growth. This number was negative very recently. It's over -7%. So if you look at the past history, whenever this number becomes negative, we are usually in a recession period. So for Silicon Valley, this ties a lot to the stock price. The stock price continues to drop. The personal wealth for a lot of people here tends to shrink, which as a result is going to further impact the housing price. GDP growth for United States in 2023 forecast is going to be negative, minus 0.5%. For California, the number is not much better in terms of unemployment rate. We are likely to see increase of unemployment rate to be about 4.7%. In addition to that, the population growth is going to be flat. There are some positive aspects. First, building permits compared with the population is still on the lower side. The building permits indicate how many new houses are likely to be built. So that is not going higher, which helps on reducing the supply of the house. On top of that, if you look at the supply and demand of the second-hand existing houses, so far, regardless of the pricing drop in the second half of 2022, we do not see major increase of inventory. So if you look at both single-family house as well as townhouse and condo inventory, it's still on the very low side compared with the market before. If you look at 2007 we had also a very low inventory, but it picked up quite a lot in 2008. So this is a very important number to watch for 2023. So if you start to see the increase of inventory, that is a warning sign because this is going to significantly impact the pricing, local market pricing. So what I've seen a lot is a lot of sellers in 2022 decide to pull out their house from the market. As you see from before, the expired listings number went up quite a lot. Among these sellers that pulled their house away from the market in 2022, you are likely to see some of them have to put it back on the market. So if this number significantly increase, more seller has to put it back on the market, then that will be major negative impact. On the other hand, if the inventory holds well, does not increase much in 2023, then you're likely to see the pricing is going to be more stable. And for those houses that's more desirable, better school, better interior, better feature, they are still likely to be in better demand compared with other houses if the inventory does not pick up. What is the best decision for you? Should you get into the market to buy or sell, or should you hold further? I would say if you have a condo townhouse and thinking about changing to single family house, when the market goes down, it will be usually a better time to move up because the larger houses tends to change more in terms of total pricing. On the other hand, if you are not in a hurry, you can hold your current house in long run, then it's probably better for you to continue holding for the long run rather than just put on market for sale. So it's pretty personal. It depends on your personal situation. Feel free to just schedule an appointment with me if you would like to discuss further on your customized plan. That is all for today. Let me know what your thoughts are about 2023 market and what is your plan.